Hey, Danny Ray with Pinnacle Quote Life Insurance Specialist. Just want to come to you today and talk to you about, a product that's been getting a lot of attention lately. Speaking to a lot of clients on the phone, a lot of other agents are pushing this product, the Universal Index Life Insurance Policy, or UIL. Okay, and I want to go over to possibly, pretty much the good and the bad, the pros and the cons. Me personally, I'm not a big fan of the product, and don't get me wrong. I make one of the top commissionable products that I can offer a client. That means that I make the most money off this, and pretty much 2 out of the 3 make the most money on it. It ain't the clients; it's the agent, it's the insurance company, and then the client gets a crumb or two. I'll explain to you why briefly. All right. Again, I reiterated in a lot of videos in the past that whenever you can mingle life insurance and then investing, okay, and you mesh it together, the 2 out of the 3 that make the most is the agent makes a boatload of money. And so one of the highest commissionable product in life insurance. And the insurance companies can make a killing too. Okay, because again, they invest your money, some cases leveraging it out up to 50 to 100 to 1. And they can make literally double your money every year. And again, they throw you 5-6%, if that. Remember, inflation's 3%. So I'm not a big believer in that. I'm a big believer in keeping your own money, buying something with the right price, the lowest cost of capital that you have, taking that excess money that you would pay for a more exotic product like a UIL, and put it in an IRA. Okay, and by the time you retire, you're going to make 10 times more money than you would any day in any kind of Universal Index Life Insurance plan. All right, so I'm going to go over the pros and cons. Bottom line is every life insurance product has pros and cons. The best thing you can do for yourself is be aware before deciding any specific purchase for life insurance, okay, to go over these products. Now, again, there's 47 different variations of life insurance. Usually it falls under 3 categories: term life, whole life, and universal life, okay? Now, universal index life insurance is one type of life insurance that, again, is growing in popularity, especially in recent years. Okay, now, universal index life insurance policy, they are permanent life insurance policies, in some cases with stipulations, okay? Granted, they say that, it's for your entire life, but there are some years in there that are not guaranteed, that perhaps maybe in some cases you have to prove insurability, okay, which I'm not a big fan of. I've had a lot of clients in the past that paid into a UIL, okay, and, pretty much when they end up passing away, they don't get what the face amount was, okay. I have a client recently that had a choice of doing a UIL, okay, and a GUL. I was offering her the GUL. The other agent was also offering her an adjustable index life insurance policy. And after looking at the illustration, I seen that after 92 there was no guarantees. Now she's 78 years old and very, very healthy. Okay, so guaranteed universal life, a GUL, I'll explain to another video, but I like to know that death benefits is guaranteed. That's the most important thing. That's why you buy life insurance, right? Okay, now keep in mind, all right, most of all, knowing that and getting some kind of life insurance coverage obviously is the most important thing. However, being aware of different types of life insurance policies will help you find the best option for you and your family. Now, how does universal index life insurance work? Similar to any majority of life insurance plans out there, premiums are paid to the insurance company. Okay, the cash value buildup is then invested in stocks, bonds, any sorts of investments, okay, that the insurance company is investing in. Therefore, the rate of cash value could build up depending on how well the investments are doing. Okay, normally they usually have a cap on the low end, okay, usually 2%, usually the rule of thumb. But again, keep in mind, inflation, you're losing about 3% a year anyway, a little more than 3%. Now, the pros and cons of a universal index life insurance, for one, these policies are usually quite flexible. Okay, you can customize your payments however you'd like. Okay, on top of this, most policies are backed with some sort of a guarantee, like I just said. And again, usually rule of thumb is about 2%. So even the market's down, you're at least getting 2%, but you're really losing about 1% or more because of inflation. Okay, now again, the way I look at universal index life insurance policies, best analogy, is my opinion, is like the option arm mortgages from 15 years ago. Okay, that people that make a $30,000 salary working at 7-Eleven can buy an $800,000 house and pick their option of payment. Okay, sooner or later, what happened? We all know what happened with that. Okay, now again, a huge advantage of index life insurance, universal index life insurance policies is the potential to accumulate a lot of cash value while receiving guaranteed protection from volatile markets. Now, again, it's cash value is great to build up. You're never going to get out of it what you put into it unless you buy a lump sum. And again, remember, the insurance company makes a boatload of money and throws you a crumb. That's just my opinion. Now, again, if you have certain investment objectives and you have a certified financial planner that says this is the best vehicle for you to go, then yes. But for the average guy out there trying to protect his family, the biggest sell point on these policies are, you can get your life insurance to protect your family and invest at the same time. It's a great great hook, okay, to say the least. But again, I'm a big believer in being control your own money and putting it where it needs to be. You'll make more money in an IRA. The price difference between a term policy and a UIL, you'll make a boatload of money just putting that excess money in an IRA. Put that money back in your pocket and invest it as you please. Okay. Now the con, of these policies usually have very high premiums. Okay, very high premiums, and takes years to begin seeing any payoff from any of the cash growth. Since they are the first few years, they'll be paid the commission. Now, the first 2 or 3 years are paid to the broker, the agent, or the insurance company. Now, remember, the insurance company is going to make money hand over fist. Okay. Now, furthermore, the insurance company has a total control of your investments. Okay, so it's out of your hands. Even though investing in an index fund on your own may be more profitable. Like I said, you take your own money. If you got a difference of a $400 payment a month and a $100 payment a month, okay, you get for the same coverage for your family, okay, then you could take that $300 and place it in an IRA and pretty much get tax-free income when you retire. Which one are you going to pick? Okay, it's a no-brainer, okay? Especially this day and age. I mean, you could throw a dart at the Wall Street Journal and make money blindfolded, okay? Now again, other options, if you don't think a universal index life insurance policy is right for you, that's fine. Again, it's for a specific clientele, in my opinion. Okay, it's somebody that has an objective why they're getting it. Usually, a certified financial planner, which you pay a lot of money for, is going to tell you and do this. Okay, now there are plenty of other insurance options out there to consider, far less complicated. Consider term life insurance. Now, again, when I say complicated, I seen an illustration from a client. Whenever an illustration is over 30 pages long, it's and again, I've been doing this for decades. Again, I've read illustrations that clients have given me that, after 2 pages, I have a migraine. So whenever you read an illustration that's confusing to somebody like me, can you imagine what it is for the client? Okay, that's just my opinion. Okay, again, investment objectives and any kind of objective that you have, that usually they're told by a certified financial planner, these are the good products for. Okay. So again, term life insurance is another alternative. It's the most straightforward and least expensive kind of life insurance available. These plans cover you for a designated amount of time. It could be 10, 20, 30 years of time. 25 or 15 is available too. And then you choose to renew your term policy once you wish, obviously when the term is up. Now, usually at a much higher price. But again, it's the most affordable life insurance for protecting your family, especially if you're in your income years of age 25 to 65. Now, again, term life insurance policies are the best for anybody with a budget, okay, or for those that want a coverage for a duration of time, like for a mortgage, okay, or, if your children are young, you want to make sure they get out of the house and graduate school. Okay, until they become adults, ultimately. Now, again, term life insurance will keep you covered for as long as you pay your monthly premiums. Okay, and again, it's set and it's level. Okay, now, of course, term life insurance does not offer cash value. Okay, again, cash value is something for whole life or any kind of UL, permanent life insurance products. Whole life is pretty much the permanent one. But again, or GULs, they're guaranteed. You pick an age, but again, as far as term life is concerned, you don't earn any cash value, and your premiums may go up significantly once the term is up, which is a no-brainer. Because again, you're older. In some cases, the older you are, the more that premium will go up on you. Okay. Now, again, how much life insurance should you purchase? That all depends. Deciding the amount of life insurance to purchase is the most important decision you're probably going to have to make. Remember, if you have young kids, you want to get enough life insurance that if you died a month from now or a year from now or 2 years from now, or at least the next decade, those kids and your spouse is financially taken care of exactly the way you envision it. from the first second they took a breath of air when they were born. Okay, that flash of light that pops through your head for the next 20 years. That's what you want to make sure. So if you make $100,000 a year and you got a 2-year-old child, you need $2 million in coverage. That's just the bottom line. Okay, again, I just went ahead and wrote an article in a previous video about layering policies, which would save you tens of thousands of dollars. Okay, so again, how much life insurance do you need? Usually, I mean, debts and mortgages is something that they can cover. Again, income is usually the best way to go. Anybody that any one of my clients or people that know me, okay, I don't talk about debts, mortgages, final expenses. Your income covers that. Okay, it's an income multiple. But again, most times it's debt or mortgages. Replacement of income is key. Final expense, funerals. I mean, funerals today cost 10 to 15 grand. 20 years from now, they might be 25 or 30. Okay, with inflation. All right. And the most important thing too is when you do shop around, you don't want to go to a captive agent. You don't want to go to the guy with the local storefront or the guy that comes to your house. I mean, 9 times out of 10, the guy at the storefront and the guy that comes to your house works for one single insurance company. So they're pretty much strapped, or they're hogtied as far as products they can offer you. Okay, very limited. An independent agent, me being a national independent agent, will offer you products, dozens of carriers. I mean, I have 200 products at my disposal at any given time to offer my clients. So what I'm going to do for you is I'll go ahead and ask you a short list of health and lifestyle questions. That's going to help me determine which carrier is going to give you the best rate. And then we'll go over the top 3 options, and then I'll explain all 3 options to you. And you make the ultimate decision, no pressure. Okay, but again, the most important thing is go to an independent agent. All right, so that's my little intake on UILs, Universal Indexed Life Insurance Plans. Again, just to reiterate, I'm not a big believer in them. And again, I make the most money off that as one of those highly paid commissionable products. Okay, insurance companies don't like me telling you that, and agencies don't like me telling you that. Other agents probably don't that make a lot of money off these, because again, when you can you can go ahead and put that money back in your pocket, your hard-earned money, and put it into an IRA, than to have some insurance company make your money for you. Okay, again, they're not an investment company; they're an insurance company. In some cases, they are investment companies. However, again, these products, they make a boatload of money off of, and you end up really getting a crumb. So any questions on this topic, feel free to give me a call, 855-380-3300, extension 2. You can also visit us on the web at pinnaclequote.com and click on Instant Quote. You can literally get a quote in seconds. Okay, and if you need to speak, give me a call, or you can go and set up a time that's built around your schedule by clicking the Talk Now button. Okay, we can click that and just pick a time, and then I'll call you at that time. All right, also, if you have any health impairments, visit our blog at pinnaclequote.com/blog. Okay, and you'll have an array over dozens upon dozens of articles about questions about certain health impairments. All right. So again, it's Danny Ray with Pinnacle Quote. You guys have a very Merry Christmas, and if you have any questions on this topic, feel free to give me a call. Again, it's 855-380-3300, extension 2. Make it a great day.